This is Joy Gilfilen, host of iChange Justice, where members of the Restorative Community Coalition talk civics with people who are living in the aftermath of an arrest. People confronting the compound dilemmas, ripple effects, and consequences on their family, friends, and taxpayers. Listeners' discretion is advised, for this information can be disturbing and can trigger an emotional reaction. This is about lived experiences discussed for taxpayer education and to advance justice system reform. Hello, this is Joy with iChange Justice podcast, and I'm here with a colleague, a person who I've invited to do some research into money matters. And the interesting thing is that as the Restorative Community Coalition and my interest in how the money game works in America, and where all the money goes and why we're in such an enormous crisis period right now. And what is the trauma cycle that we're in as we're dealing with economic debt? You know, we were pushing the debt ceiling and that became a big political issue. We've been talking about how much it costs to do emergency conditions. We had a conversation about international risk and large insurance brokerage industries. And then I was looking at one of our members who was a client, and he started to talk to me about these different numbers associated with his account and how while he was inside prison, he started to notice his sister was actually tracking him. And she was going, you know, it's interesting, your case number has become this other number, and it appears to be going through the stock market as a municipal code. And this was about 5 years ago. And I didn't understand how his case number in jail and at the point of arrest could have become a commodity in the stock market. So I sort of blew it off. And then I started tracking what's happening in the prosecutor's office here when people have case numbers and why the prosecutor puts so many charges on people and stacks things. So I started to ask my friend, a researcher who worked in Wall Street, to see if he could track it down. And so that's what the interview is about today. And it's about how people in silos just do their job tracking numbers. So welcome to the call, and let's have you start with why you're interested in tracking these numbers and what you witnessed when you were working on Wall Street trading stocks.
So my interest developed when I was in the 90s in Wall Street, mainly because I see a lot of numbers like CUSIP numbers, and I would be trading, and I just never understood like where these things come from. That's number one. And number two, I noticed that I was siloed, that I was in literally a physical cubicle, and I didn't know what was happening next to me, much less at other floors above me, much less at other firms around Wall Street. So I just felt like I didn't really know what was happening, that I was just kind of doing my job, keeping my head down, doing the best I can, but I couldn't really move forward the way I wanted to because there's some hidden, because I'm in a silo, you know, I don't know what's happening around me.
Sure. So let's say that when I started talking with you about this, I said, well, what about these numbers and how does that work? And you started tracking it. Let's go through the sequence, if you will, of how an incident, you know, we all know that when an arrest happens or when a 911 call goes out, it provokes a cause number or some kind of an incident number. Talk to me about this sequence that you've discovered, how numbers change form as they move from one stage of an event to the next, to the next, to the next. So let's start with a cause number. Let's say an incident, a 911 call goes out, and start me from there.
Sure. I can really relate to like the 911 operator or the police officer, because they're literally doing their job. So one of their jobs is they assign a cause number, which makes total sense. Then if it goes to court, then it becomes a case number. It has a different flavor to it.
And each case has different charges, and each charge has a different number. That's part of what we've learned in watching what's going on in Whatcom County. And that's part of why some of these issues where charges get negotiated, the police agency years ago that I was working for was really happy to realize that the police officer didn't have to choose which charges to file. They just passed it on to the prosecutor's office. And the prosecutor's office decided, based upon the police report that was written, how many possible charges there could be. So I just want the public to understand that while I'm talking about money and numbers, I am really talking about people's lives and how the prosecution of people's lives and the number of continuances that happen every time you go to court, there's another case number for the continuance. So let's keep going. So it goes from a case number.
Yeah, it starts from a cause number, then it goes to a case number, and then as in the court system, then accusative gets assigned. When these performance bonds, all these things that happen in court, literally a number is assigned to it, and it's called accusative number.
And hold on. The accusative number, this is when the number is assigned in the courts, and when it goes into the administration and the tracking by the municipalities, those municipalities consider these cases as municipal assets, because an insurance bond is, a bond is like a municipal assets that's traded as an asset for the municipality or the jurisdiction. So go ahead, let's talk about the CUSIP number. What is that?
So CUSIP number is something that's very standard in Wall Street. I'll bet you most Wall Street people don't even know what the acronym stands for, because everyone just calls it CUSIP. But it stands for Committee Uniform Securities Identification Procedure. And it's just a number that identifies a security. That's all.
To a municipality or a company or an asset, whose ever asset it is. So I think you were telling me about how Walmart even has a CUSIP number. Is that true?
Yeah, Walmart is any security has to have a CUSIP number. It's just a number attached to the name
of the person who owns that asset or that bond at the time.
It literally it's an identification number. It's a security identification number.
So it's an insurance surety number, basically, that then once it gets transferred up to the bonding agency as a municipal asset, then you get a bond number, is what I think I heard you say before.
Right. So it starts innocently, cause number, then goes into a case number, it's in the court, CUSIP number is attached. And then the bond number aspect happens, it looks like at the end of every day. It's just there's an actual sell and trade done at the end of the day. So these municipalities, the hospitals, the court systems, they sell these bonds.
They bundle them up.
They bundle them, they sell them, and they assign a bond number. And the broker, literally at the end of the day at 5:30, buy them from the municipality. And it's just a standard trade. Now, the broker, of course, is because he's going to sell it later, right after that, to Wall Street. But yeah, it goes to the CUSIP number, and then the bond number and the broker number are attached.
Wow. And so ultimately, these assets that are generated because of an incident, these assets actually somehow become a tradable broker product that's traded in Wall Street in the bond market. Am I following that?
You're following that, because once the broker who's registered on Wall Street buys it from the court, for example, now has a bond number and he has a broker number because he's registered, then he turns around and he sells it to the Wall Street markets. The Wall Street markets then assigns it into all sorts of funds, like PIMCO, total return, blah, blah, blah fund, or many, many other funds. And then those funds are sold to pensioners. So pension funds buy these retirement assets. And I used to work both on the sell side And I also used to work in the buy side, meaning that I worked for a pension fund. So I get the buy and the sell parts of this.
So, like, for example, what was one of those companies that you were talking about, PIMCO or something?
Right. So Wall Street has stocks, they also have bonds, and they sell these bonds. These bonds generate revenue. And one of the big ones, there's quite a few of them, but one of them is called PIMCO. And PIMCO, I forgot what the acronym stands for, but it's one of the largest companies out there. And they package these bonds and they sell them to retirees, to investors that need the income. Very straightforward. And I never understood where the heck did these things come from in the beginning. I went through a whole Wall Street career. I had no idea where these bonds start from.
Interesting, because one of the things I learned when I was doing some other work, and I don't want to go off on a dog trail here too far, but one of the things I learned when I was working with the judges and with the Bar Association, there are retirement funds that do come in, and we haven't figured out quite how that links up yet, but that's going to be another conversation down the road. So I guess the biggest thing I wanted to talk with you about at this point is that as we're discovering how this system works, it's really a systems of numbers expanding into more numbers, expanding into more numbers. And if the person is acquitted from their innocence at the front end, the fact is the computer system is already taken off at a flat run. So there's really no way to recapture those bonds. And so it's almost like what happened with the stock market crash with derivatives. Do you want to say anything about that, or shall we go back to just people doing their job?
I probably want to stay, instead of talking about derivatives, which is complex and no one really understands them. But people really do understand what doing their job is, especially doing it well. But if you step back, you're doing your job, and literally next to you or in the next department next to you, you don't know what they're doing, nor do you know who the head of the company is coordinating, because you're doing your job. And this is across society, across everything. And I didn't really think anything of it until I started seeing, wait a minute, where there all these CUSIP numbers? I would never have guessed that a simple police stop or started a bond that I'm on Wall Street trading. No idea.
Right. I did look up PIMCO, and that's an investment management company that brokers and deals in bond and markets and investments. So it's interesting how many people are trading bonds, and we have no idea what we're trading and why we're trading it. And it's interesting also, I went back and I started investing quite a few years ago in the stock market options markets because I was curious. I had taken some courses in stock options trading, and I heard from inside the stock options world that people could make massive returns on investment from inside the stock markets if you were trading options. And yet what's interesting, when I went and tried to talk to some of my insurance friends or my real estate investment people locally, they would tell me, oh, trading stock options is very, very dangerous. It's very risky. And yet, according to those people who said once they understood what stock options are, it's not that risky. But that is part of the story that's taught to people who do investments, and they keep their money in nice, safe, and secure bond market or stock market trading group. So like PIMCO, or like some of the other people who are your Wall Street brokers, and you just keep your money there and you earn a nice, secure, stable return. And yet people who are trading in the options markets could yield a 300% return in a month. And I'm not here to promote that kind of trading. I want to be very clear about that. I am not a financials broker. I have no knowledge specifically, no professional knowledge in how to trade investments and do things. I'm just a common citizen paying attention and noticing that international money, national money, local money, and human issues are colliding a bit. Let's take a break, and we'll be right back with my friend who was doing some of this research.
Thank you to our donors whose contributions help our clients directly. You can see the sponsors list and the names of donors and members who are publicly recognized on our website at therestorativecommunity.org. All contributions are appreciated. You can also subscribe to our newsletter, volunteer, donate monthly, or leave a legacy gift by clicking on the donate button.
I was going to say the bond market's 10,000 times bigger than the stock market. So you see a big number, the stocks are really big, and you add them all together. The bond market's not 100 times bigger. It's not 1,000 times bigger. It's 10,000 times bigger than the US stock market. So this is a big pile of wealth. Your signature, these bonds this is where, I mean, bonds are like where all the wealth is stored. And it's such a big number, people can't put their heads around it, you know?
So this is international banking level of investment. And I know that when I started trading in options, one of the things I discovered, to my chagrin, is that while I was trading in Washington State between 7 and 3 o'clock or whatever time the markets were opened, I was able to trade certain amounts of things myself as an independent options trader because I was able to get online and do my trading through E-Trade services type things.
Right.
And then I discovered from working, because I was learning about how to do puts and calls and all these different things, I started to find out that large institutions and banks and people in other countries could trade 24/7. They could put in large institutional trading, often happened after hours. And so I could make some of my trades online. And if I put them in at night, they were held until the next morning. And then I started asking questions about that. And I discovered from my options trader colleague that people individually, when we call our broker, like if I called my investment broker here in town and asked them to put in a trade for me, sometimes they would hold my trades up until the end of the day for their company to be able to trade after hours. So I wouldn't always guarantee that I would get my buy or sell ticket to happen at the time that I put in my request to trade. So there would be a lag time. And then I started asking about that, and I started to find out that high investors, people who are qualified investors according to whatever their rules are, they would be able to go in and they could actually buy insurance to cover their trades in case the trades happened in a gap in the market, where we had time zone differences or we had different rules about the trading platform. That was interesting. So talk to me about how does this look to you when you're looking at it from the outside of the game? And again, you don't have to tell me any details, but I'm just, what's it like when you're actually working in New York on the trading floor and you see and feel all this stuff happening? Is there any reality to what people are buying and selling, or is it mostly just about whether or not you made a sale at the right thing? And what was talk to me about living in those silos.
Well, living in the silos, you don't have to actually be on these trading pits. You can actually just be on the regular floor in one of these big buildings in New York, each of which is one was CIBC, Canadian Imperial Bank of Commerce, I used to work for. Another building was a Swiss bank. I used to work for them. Then I worked for the Americans, Merrill Lynch. Each building just has a floor and has cubicles, and you're trading. And you're just focused on what you're doing and how it impacts you for your bonuses. And that's what everyone's doing.
So you're just tracking numbers all day long and looking for your gains or your losses and your profits.
Yeah, and you're communicating with your boss, because usually if you're cubicled, by definition, you're working for somebody above you, so you're kind of focused on your action, on your profit-making activity, because it directly pertains to you, usually at the end of the year with a bonus. Yeah.
So your company and your boss has expectations and he has goals and he has strategies to be able to make his economic goals. And if he makes his economic goals, then the guys above him are going to give him bonuses. So it's like this tiered system that is all focused on the gain of money and
Yeah.
how fast and how good you are at trading.
Exactly. And one of my biggest mistakes was that I was always focused on what I was told to be able to generate. But to be really successful in Wall Street, you have to turn that around. You're the one that has to create the thing and tell the people above how you're going to create this, and you can split it with them. I never did that because I never had a big enough knowledge about outside of my cubicle.
Interesting. So you were like one of the ants crawling around on a great big anthill, just doing your job.
Exactly. So perfectly in the cubicle, very happy. I was making money. But I didn't get the big picture at all. Yeah.
So it's interesting. I had a woman from Germany who spoke on one of the earlier iChange Justice podcasts. Her name is Alona Krohn, if anyone wants to go back and look at the episode. We talked about how the economy is based on and built on a false human story. Like, in order to measure the economy and drive the entire economic models and the high level insurance broker dealers who are protecting municipalities and jurisdictions and governments and countries from liability in the case of emergency disasters and economic disasters, she was talking about how economics itself is based on a story that there is a human that is like a little stick figure. And she called it the Homo economicus, that literally is part of the economic story. And it was interesting to start listening to her talk about how the whole conversation of risk and liability are the big issue in the money world, because if you can defray liability, like avoid liability and minimize your risk, your investment churn just keeps getting bigger and bigger and bigger, and you can make large amounts of money, which is part of the thing that most of us who, like, I'm no longer trading in the options market because, number one, I didn't make as much money as I would have liked to. There were certain trades that I did well on, but at some point I realized I couldn't just deal with looking at numbers all day, and I changed my mind and I went back to working in high performance leadership. But I stopped trading. And since then, I've started watching. Like, it's fascinating to me how the Washington, D.C. just barely was able to pass a debt limit. And now Wall Street, instead of that being a liability to Wall Street traders, it actually became a stock market boon. So again, I don't want to go into huge conversations because it's very complex, but the basic truth is that once the feds lifted the limits, it floods the market with money that's just printed. Is that sort of accurate?
Yeah. People don't really understand what money is and its variations. And you also mentioned storylines. So since you mentioned really quick about the debt ceiling debate, a friend of mine quickly told me, I actually saw both, and then I saw that both sides did not see a third part. A friend of mine who's a Democrat simply said, hey, NPR told me, and I verified that Trump was worse. He did much higher debt numbers. Okay. And then I heard a friend that was listening to Fox News. He said, you know what? Biden's doing terrible. This debt stuff, he's the one doing all. Okay. So what you get is this just locked positions of these two camps warring at each other. And what I said is, well, won't we back up and say, is there a possibility of like a third point that negates these 2 points, AKA Do we understand how big the bond market is? 10,000 times bigger than the stock market. Is it possible that these numbers being thrown around that are terrible, 5 trillion for Trump, 4 or 5 trillion for Biden, really is, it's not as big as it seems, that it's actually payable overnight without a problem? Is that possible? And most people have no idea. There's like, well, no, these numbers are huge. You can't pay them off. That's why it's called debt. But consider the possibility that these are just two stories that are being contrived so that you stay on your camps and you don't consider a third possibility that it's actually not a problem.
So that's a whole other conversation that we can go into with politics between the Democrats and the Republicans. But what's actually happening here is almost like we have a monopoly on who tells which story. And the biggest thing is that money, the economic system is in fact behind all of this. And that's pretty disheartening. I don't know how we're going to work around that, but I want to bring it back to the local reality. So our local community wants to, the executive branch of our local community wants to invest $200 million in a bond, to get a bond or some amount around that. They haven't exactly told us yet, but they want to buy this bond so that they can have excess money in the system so that they can build a brand new jail, when what we really need is to help our local people solve their economic challenges that they're actually facing in a local economy where they don't have enough cash flow. So can you just give me an idea of what the difference is when you're a local person? Because I know that when you left the stock market, or the trading floors, you also became just a normal human being saying, how do I pay my bills? So what is the difference between a normal person having in business, trying to cash flow a business, and he's working with real cash, and then what happens when you just print more money, when the federal government just prints more money and puts that money out? The taxpayers still have to pay that money back. Isn't that true?
Yeah, this is one of the biggest eye-opening things for me. Was I was in a silo, I was in New York making money, and I didn't really understand that all that little world was not really connected, or was connected less and less into the real world. When I came into Texas, into the real world, working with Airbnbs and real world stuff, I just realized that the money flows are not going in between these two worlds. And that was a big eye-opening for me. You know, the banks are supposed to be lubricating the economy. That's not what's happening. The banks are lubricating themselves bigger and bigger and bigger, and the economy is being unlubricated. And this leads right into what you said about the bonds. Once you pass a bond, you are in debt, you are indebted, and the opposite does not happen, which is the growth of your income. So you're investing into a negative possibility, as opposed to using that and investing it into a positive possibility. And over time, it really makes a huge difference.
So in other words, you're talking about investing in bad debt as opposed to invest in real human capital and investing in real solutions. So it's truly essential. And this is becoming more and more obvious to me as the investigator who's sort of looking at how do we help local people through this economic crisis that happened during COVID. And it started happening even before COVID.
Yeah, you can see that you mentioned the bonds are bad debt. It's interesting. On Wall Street, the bonds were good debt, meaning it's things that you can trade and make money with. But at a local level, when you're investing into a bond for a prison, it's actually bad debt. So it's like, which perspective do you want to look at it? It's both. On one hand, you can make money with it, but if you're actually at the local level bonding yourself, it's actually bonding you.
So it's actually a contradiction in terms, much like when I was talking yesterday or last week about stakeholders versus stockholders versus local people who are having to deal with the payback. It's like once it's hard to wrap your mind around the idea that when the economic game is being played, it's being played in a surreal world that's sort of behind glass walls, where ones and zeros is the game. It's like playing Monopoly, if you will. And it's interesting because I started to look at the game of Monopoly and I did some research on the history of that. And Monopoly was actually created as a game, as an economic game, to teach people how to be economically wise and how to pay attention to what you're doing and how to do things. But when I played it, I very quickly learned how you do not buy any, like Park Place and the big game. You don't invest in those big things unless you have a substantial amount of money to cover the liability in case you get dinged. And so it became actually a way of, for me, I learned that you need to play it really savvy so that you could make a lot of money, because once you become an owner of Park Place, if you can handle the liability, man, you can wipe out everybody else on the board. And so in a way, that's sort of what you're talking about here, is the game has been divided between camps that have money and those that do not have money.
Right. And in particular, because the definition of money has been muddied for a good 100 years since the creation of the Federal Reserve. If people don't understand money, if not taught in middle school, or maybe that's exactly where it should start, nor law. These things that you interact with should be talked about, understood early.
So let's take another quick break. We'll be right back with my researcher who was studying numbers and money and how the bringing in of technology has made it so easy to just trade numbers and to trade probabilities and to trade trends and to trade based on risk and liability. And so there's almost like this false economy that has been created that is tripping us all up because we don't understand it. We're not in that world. And unless it's like playing a game where you don't even have the same English. And this is the same problem we have once you end up in the court system. You don't even know the language and we're silenced. So let's take a break and we'll be right back.
Are you a member of patreon.com and enjoying our podcasts? As a patron, you can support the production of the iChange Justice podcast series. You can also support the Restorative Community Coalition, get our news, updates, and access to our digital training programs downloaded directly to your email address on a regular basis.
Welcome back to our investigator who has been doing some thinking about how this game works. And he came up with an analogy. And we'll see if it works to just cause people to think. Go ahead.
You know, I see little girls that want to be princesses all the time, and guys that want to be king. And so this psychology is kind of well ingrained about kings and queens. And since I was in Wall Street, I didn't understand the big picture. I was in a silo. I was literally in a cubicle. So I came up with a way of understanding what the big picture is. And the easiest way is just to put yourself in a king's shoes, say back in England in the year 1000. And back then, all you needed was a commodity like gold. You needed protection, and you needed law. Those are the three things that you needed in your king or your queen. So 1,000 years ago, when money was gold, people didn't want to carry this commodity, and they went to a guy that will keep your gold for you and gave you these little pieces of paper, receipts for the gold that you had that he's keeping for you. And you trusted him. So over time, this guy that was keeping the gold for people, who he gave out these little pieces of paper, those little pieces of paper, the receipts for the gold, that got started traded as money. Because it was much easier to trade the little pieces of receipts than the actual gold behind the vault. And this is the key part. The guy behind the vault holding the gold realized that the guy that left him the gold, he's using the little receipts, and another guy that asks him for a loan he could just loan out the gold and not really tell the first guy that his gold was lent out. And then when a third guy, you can actually do it again and again and again. In other words, you can lend out more gold than you have. That's what it boils down to. You can make a lot of money, and because people trust you, those little receipts, you still have the receipt that you're owed the gold, and you can just keep lending it. And this is this weird term called hypothecating. And hypothecating is one of these weird terms that it means that if you're a sovereign, if you're an entity that it's completely independent, that you can have, this is one way you can make a lot of money. And because you are an entity that is independent. And if you back up,
it reminds me of chess, where you have a king and a queen and a bishop, and those three players can play. I had a boss one time who was working with me at the time was at the Visitor and Convention Bureau here in Whatcom County. And he talked to me about three-dimensional chess and how we should start studying 3D chess because it would be easier to understand what's going on in the world. And I started looking at 3D chess games, and they're complex. And yet one of the things that I found when I started working at the levels of high-end executive and economic leadership, I realized that a lot of those guys do in fact play 3D chess. And yet most people don't even many people, I should say, don't even understand chess. And the rest of us are down at the bottom end where checkers is the name of the game. And before that, you just come up with certain simple things like dominoes. So the analogies to different kinds of checkers, these board games. And I find it fascinating that today, board games have become a big way for people to come together in various breweries and things where they actually come in to drink beer and play board games. It's like a way of building community in cities and towns and inner cities and communities. So it's interesting that you brought the game idea into it. So who is the one that protects the gold? That's one of the questions. I don't think we want to go there right now. But just to think about the analogy of where the game is being played and who's playing the game, that, maybe we ought to build our own game about that.
Yeah, that'd be a great game because it's really what's happening today. It's just, the law, the protector, and then the commodity. Those three elements, when you're a king 1,000 years ago, is what was needed. And the same three elements are needed today. You need law, you need the commodity, and you need the protection.
So what's interesting is let's go back down to the local community, because again, how do we help each other? In our community, we've been looking at developing a humane community initiative or humane community movement, because many of our local counties, certainly up and down the I-5 corridor, are dealing with a lot of homelessness. And they're dealing with law enforcement, police officers who, by the way, are just doing their job within their silo, and they don't understand. Most of them that I've talked to have no idea that when they write an incident report or when they write a citation, it becomes a bond that then gets traded in and used at many, many, many other levels to make money for people who are invested in retirement systems. That game affects the real human. So when I was sitting on the Incarceration Prevention Reduction Task Force, and I was listening to people talking about how if someone didn't show up for court, and a warrant would be issued for their arrest. And back at the bottom of that, there were people who were trying to get out of the jail system. They'd paid their time. They were in probation. They had to get out of the supervision system. That's part of their requirement in order to get back to work, to raise money, to take care of their family, to get on with life after they, quote unquote, paid their debt to society. I was watching how the probation system was often set up that people had to pay fines and penalties. And if you didn't pay your fines and penalties, those fines and penalties would rack up. And then there was interest being charged on those fines and penalties. And then the person who owed the debt, if it became a bad debt to the municipality, they would sell the bad debt off to debt collectors who would come after people. And then the person became at risk for going back to prison for not being able to pay the debt. Well, the person who's trying to get their life back together, working at minimum wage or less, would end up going behind the eight ball because they couldn't pay their debt. When they couldn't pay their debt, they tried to avoid going to court because they couldn't afford to be arrested. So they would try to avoid the system. So we had this whole backlog of issues that started to back up because of poverty.
Yeah, and when you avoid the system, by the way, the system, the law literally says if you're not responding to a summons by a certain number of days, then you're found by default that issue that you're guilty on the issue. So
yeah, so that ends up throwing continuances, it throws warrants, it throws all of these things into a cascading effect that when you try to talk about it to most bureaucrats, and I don't mean the word as a negative, it's just they work within the bureaucratic system. They're working inside a silo where they do not understand the ripple effect of what happens to the piece of paper that comes to them. And so they pass the piece of paper on into a community discussion pot where us in the community who become citizens sitting on these task forces, we have no idea what we're talking about, because the people who are actually taking the money and taking these cause numbers and case numbers and moving them from this category because it went from this liability or risk or asset bank into a different one that eventually goes up level. We don't even know what's going on with it. And that becomes a huge problem.
Yep.
So if you were to help us compare this to the way that business used to be done in America, let's say 100 years ago even, we used to have Grange halls. At least I did. You know, when I grew up as a young kid, that wasn't 100 years ago, but it was a few decades. So when I grew up in Eastern Washington, one of the things we had was I paid my taxes to the government, normal. I worked in business, normal. We actually exchanged business in real money or real dollars, American dollars, US dollars. And if you didn't have dollars to trade, you would trade equipment, or you would trade hours in the field, or you would, I literally sold manure as a young kid. That's the one thing I had excess on the farm. We had cattle. I was milking cows, and we were taking the cream to the store, and the creamery would buy the thick fat, and then I would slop the hogs with the leftover milk that built my pigs up so that we could grow pigs, and then we could take them to the market and slaughter them and get paid money. So one of the things I had in excess of was manure. So then I took the manure to town and I sold it to the city folks. And the city folks bought it because they needed to garden. And so they would give me money. So now I had money to trade with and to go buy food to bring it home so that my mom and dad had more money to feed me and my little brother and my sister and stuff. So it was interesting. We were able to trade what in the market that you were trading was commodities. These were actually consumer goods that people needed. So it's interesting that just in my lifetime, my generation, we went from generating real money that we earned real time in a community and building a network of people we could trade with so that we could meet our needs in case the storm hit and the power went out. We were building relationships. So relationships were part of our currency. What do you have to say about that? Were there relationships that you were building when you were working in New York, or was it all pretty much inside boxes and going home and inside cubicles? What was that like?
Well, this is interesting. I thought I had relationships when I was in Wall Street, I was there a long time. And then when I left Wall Street, something interesting happened. People didn't call me anymore. The people that I used to be very friendly with just moved on, and I moved on. And it really kind of dawned on me, wow, these relationships were just based on money. And I personally conflated my work environment and in money and thinking that that was a relationship. No, I was there to make money and they were there to make money. Therefore, if I'm not in that environment anymore, we don't have a relationship. I didn't get that till I left. So that's one part of it. And your other question was that long time ago, you know, America's famous for being very successful, very wealthy. The main reason is, as it relates to money, is money was a commodity that was limited, and therefore you have to use relationships to create productivity with it. And that changed about 100 years ago, where the commodity is no longer limited, and the buyer and the seller don't have any say as to the quantity. So you can, in the past, when something was limited and you had to work for it, that's productivity. That's why the light bulb was invented. There was really, you had to be productive. You have to invent something to get money, because there was no other way to create quantity. Now the thing got flipped. You can create quantity of the thing and then pretend that that quantity is from productivity. It's not. It's just based on quantity. And by the way, there's no relationship. Since we're all coming back to relationship, you don't have any relationship with this money. A couple hundred years ago, people debated back and forth what money is, how much of it I should create, how much we should trade. Okay, we have an agreement between the buyer and the seller. Now you're simply given a piece of paper or an electronic form that is just printed, and it just creates all sorts of distortions. It literally, you don't have relationship to it, so you don't know what's wrong.
So what really happened is that we have this huge gap in reality.
Yeah, it's a gap in reality, and I saw it in the present day when I left New York, and what I thought were friends really were just acquaintances that based on the local condition. I didn't really have a relationship. Yeah.
It was relationships between people talking about a game.
Yeah.
And about the trading probabilities of the game. And so the whole thing became a surreal conversation, which is actually in some ways sort of like the distractions that we find. And I think this relates back to behavioral health, and we're going to have to wrap up the recording here pretty quick. But this comes back to the number of people who get distracted, if you will, even when their money is going down and they've got serious stress at home with family and children and economic stability, they will go out and drink themselves silly while they're watching football games or various kinds of games, because it's a distraction and people want to say, oh, I need a break. Let's go play a game, or let's go gamble, or let's go to the casinos, or let's go to this or that, or let's drink. And then what we end up with is a lot of family members, grandchildren, children, people who can't play the games. They end up getting left isolated and alone, which is leading to the economic failure, which leads to the lack of mentors and coaches and people to train and mentor our younger people about how to create productivity. Because what the older people, the mid generations, have learned to do is how to trade commodity as opposed to build commodity. Would you say that I've sort of encapsulated what you learned from this whole thing?
Over time, the world of money and banking and politics gets very, very big. And if you happen to leave it the way I did and went to middle America, I'm working on Airbnbs, and you really see that economy is shrinking. You really see the disparity between the two, that the two are not actually connected, or they're less and less so. I've seen it for myself. It's not a theory for me. So That's an issue, big issue.
So thank you so much for joining us on iChange Justice podcast. I think this has been very instructive. Thank you so much. We will bring you back at another point to talk about how this relates to what we can do. I know you have a little bit more research to do to help us make sure that what we're talking about is directly relevant to our audience. But I think this is enough to give people an understanding of how to start listening to the news differently. Start listening to the economic choices that are being made differently. Start listening to your political advisors differently. Start listening to your neighbor differently. Start listening to your teenagers and your children when they say they want to learn to do something and you don't have the time to go teach them. Maybe you should go teach them. Building relationships in local communities is really important. Building new friendships where people can trade real live commodities like growing green food on your window boxes or growing vegetables in your neighbor's garden or your garden, and learning how to team up in communities, teaming up and learning about 4-H and Grange halls and community groups that are working together to learn how to physically work is a good thing. Is there any one last comment you want to make before we close, or shall we say good night all?
This community is very important. The current system is based on not just trading relationships that are getting more and more and more away from each other. And the root of it all is relationship, where if we are listening to each other, creating relationship, then this other thing that's been somehow created kind of withers on its own. So community relationship, really knowing who you are, it's probably the number one thing that I am working on myself.
Thank you so much. And thank you, listeners. We'll be back again with another episode next week. Thank you all for listening. Please share our podcast with your friends and family. Subscribe at Spotify, iTunes, or from your favorite playlists. At therestorativecommunity.org, you're invited to subscribe to our newsletter, connect through social media, or send us feedback on our shows. If you're inclined to help, you can volunteer, donate, learn more, and connect at info@therestorativecommunity.org. Contributing helps us empower those silenced by oppression so they can emerge into their higher potential. Thank you.